Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Is a new Chinese tea restaurant a good investment? In this video, we will be analyzing if Chagee Stock is a buy. Can Chagee Stock, ticker symbol CHA, be the next Dutch Bros? Let's find out. We have so much to cover, so let's go ahead and jump right in. Cue the logo. Let's start off with the price action. Given that Chagee just IPO'd in April 2025, let's look at the 6-month chart. Here we see that the share price has fallen 24% since IPO. Many new companies have a challenging start, but this could be the beginning of something big. Let's take a look at the fundamentals to learn more. Gross margin is 48%. This is very good for a new restaurant company. Revenue has compounded at around 325% since 2022 and has grown to $1.85 billion most recently. Sales are growing at a breakneck speed for this company. Sweet? When we look at cash flow, we see that operating cash flow has improved at a 516% CAGR since 2022. CapEx has worsened at a 280% CAGR. As a result, free cash flow has also improved at a 573% CAGR during this time period. This amazing growth is largely due to the company being so new, but good growth is still good growth. However, we should note that both operating cash flow and free cash flow fell since 2024, despite steady revenue growth. Could Chagee be developing early growing pains? Weighted average shares outstanding have actually decreased since 2022, going from 100 million shares to 99 million shares most recently. Chagee has slightly reduced share count pre-IPO. Given the 14.7 million shares sold in the IPO, Chagee has likely diluted existing shareholders by 15% in the IPO. Only time will tell if management will dilute shareholders post-IPO or begin to buy back shares. Now let's view return on invested capital. Return on invested capital has worsened from 161% in 2024 to 158% most recently. Though there was a decline, the good news is that Chagee is profitable and is only improving. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage, as well as inventory control. Going from minus 24 days in 2023 to minus 14 days most recently, Chagee has gotten less efficient over time. However, the value is still negative, meaning that Chagee has tremendous operational efficiency. Now let's look at Chagee's debt. The net debt to EBITDA has decreased over time, going from 1.2 in 2022 to minus 1.5 most recently. Given that the company is profitable, this value means that Chagee has more cash than debt. This is an excellent place for a new company to be. The balance sheet is solid. Though it is very early in Chagee's life as a public company, let's compare performance to the benchmark. If we perform a backtest comparison of investing $10,000 in Chagee versus the S&P 500, we find underperformance for Chagee. In that comparison with the S&P 500, $10,000 invested in Chagee would have shrunk to $7,796 versus $11,175 if invested in the S&P 500. This is a return of minus 22.04% for Chagee versus 11.75% for the S&P 500. Chagee investment would have been much more volatile, with a 23.47% standard deviation versus 2.80% for the S&P 500. In terms of max drawdown, Chagee fell 22%, more than the max drawdown of 0% for the S&P 500. Chagee also massively underperformed the S&P 500. In comparisons, using the Sharpe ratio. The Sharpe ratio for Chagee was minus 6.10 versus 22.85 for the S&P 500. Chagee has been trailing the S&P 500 by nearly every metric. Again, it is very early, so what I take away from this data is that Chagee is in the midst of the typically post-IPO slump. Chagee has promise, but also a few current challenges. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Chagee. It is a restaurant company with a gross margin of 48%. The revenue per share CAGR is 327%, and the free cash flow per share CAGR is 575%. The gross margin is great and growth is roaring ahead. I love this. A return on invested capital of 158% is good, but will likely normalize down to industry levels. Next, the cash conversion cycle of -14 days is excellent despite trending upwards. Concerning debt, a net debt to EBITDA of -1.2 means that Chagee is still profitable and more cash than debt. So from a fundamental standpoint, Chagee looks really good. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is 1.1, indicating that Chagee is just slightly overvalued compared to projected earnings growth. Chagee is the new popular Chinese tea chain that was founded in 2017. The company offers a wide range of freshly brewed tea beverages, including various tea lattes, pure teas, milk teas, and fruit teas, crafted from quality tea leaves and hand-picked ingredients. With a commitment to providing healthy and low-calorie options, Chagee has rapidly expanded, boasting over 6,000 stores worldwide. With nearly 5,000 employees, the company is headquartered in Shanghai, China. Chagee is expanding rapidly, making serious moves in the premium tea market. They have also just opened their first location in the United States, in the Westfield Century City Mall. The biggest risk here is that Chagee is a newly IPO'd stock. We don't have years and years of market behavior to analyze, which makes it a bit more of a speculative play. There might be some wild price swings in the initial weeks and months as the market tries to figure out its fair value. Still, given the company's seriously attractive qualities, I am optimistic on the outlook. Overall, I give this company a 9 out of 10 using my proprietary scoring system. The future is up and to the right for this company. Many thanks for watching. What do you think about Chagee? Share your thoughts below. It is always great to hear from you. Check out some more videos right now, and don't forget to put your money where your mouth is.